Hey, good morning, everyone. It is Wednesday, December 10th, and we are on the day when the Fed is going to meet and make a decision on interest rates. It likely will probably not mean much because I think the market's already priced in 25 basis point cut, but it could really come with some extras. First, if they change their tune and they cut even more, it could be a rally. If they announce the 25 basis points, but then come out with a hawkish stance like, hey, we're going to be, hunkering down because the economy doesn't look good. The jobs market doesn't look good. We'll see what they say. Leading up to the meeting, I've heard some good news, or some, I would say, somewhat good news. Like, there is jobs being created. Inflation is being somewhat controlled, or it's not a big giant problem. It's fine. Some industries are doing just fine. Some industries are going to struggle, but that's the case any year. Any year you pick out, there were a couple of industries that those industries themselves were in a pullback, recession, slowdown, but that's just normal. So we're going to do full analysis on stocks after we talk about the market. And I'm joined by my colleague, Daryl. How you doing, Daryl?
Doing great, Victor. Thank you. How about you?
I'm good. I'm good. You know, for some reason, this market's kind of, it's a little bit like a baseball game where there's been a lot of innings where nothing's happened.
Right.
No home runs. It's just a really good defensive battle, so to speak. The markets, the good news is, I feel that in the month of November, the market, its pullback was, I think, constructive. It brought down some stock prices. Stocks like Nvidia. I mean, Nvidia stocks is down from its high, and I think it made it more investable. And there's a good number of stocks. Meta stock is down, investable. And you can go down the list and say, hey, there's some investable stocks out there. I think that was a constructive pullback. As we head into 2026, I think the economy is going to be fine. Looks like the US and China are going to form a trade agreement that includes, some agreement for the Chinese to buy soybeans, and they're going to be allowed to buy some of the chips that the semiconductor companies that are run here in the US produce. So those kinds of things are going to help the economy in a lot of ways. I think the low interest rates are also going to help the economy next year because I'm seeing stories that mortgage applications are up a lot because people are refinancing. Maybe they bought a home 2 years ago and they're sitting on a higher rate and they're like, hey, I want to refinance and lower the interest rate that I pay, maybe lower the monthly payment they pay. And then one thing you've brought up in the past is that the IRS had been withholding bigger amounts than were needed. So the expectation that come tax time, taxpayers are going to receive a bigger return in 2026. So when they get that bigger return, they're gonna be like, all right, cool. Let's go on vacation. Let's buy a big ticket item. I think a lot of them might be, hey, let's invest in stocks. Perfect. That's a good idea. But they'll have a little more cash, a little more discretionary cash here in the spring. And that's going to help. That's going to help get the year off on the right foot, so to speak. So some things I think are brewing that 2026 should be a good year. I don't see some big giant problems. Even if Russia, Ukraine form a peace treaty, that'll be good news. That'll be
I
one.
actually got a number yesterday on the withholding. It looks like tax returns next year are expected to be 18% higher than the average. So
Wow.
that's the impact of the IRS being late to adjust the withholding tables that companies use to withhold taxes.
That's big money. That's like a
Yep.
giant stimulus check that
Yep.
people are going to be getting. All right. Well, that's good news. And then some, I don't know what's going to happen with tariffs. I think the Supreme Court was supposed to rule that if those tariffs were lawful or not. If it's concluded that nope, they weren't, you got to return the money. That'll be a nice, return of an expense to Costco, um, Target, Walmart. A lot of importers will be looking to get a big check from the federal government. That might help too. Um, all right. So looking at the futures market, we are flat. That's expected. I think we're going to stay. I don't know that we're going to move a whole lot. The Fed is going to announce what they're going to do at 1 p.m. Eastern, and I think at that time the chairman is going to start speaking. Right?
He speaks at 1:30 Eastern, and
Uh huh.
they release the uh, actual rate action at 1. So we'll know
Yeah.
what that is at 1, and then 1:30 gets to the podium.
Yeah. And what's interesting is, journalists they need to create stories that fill the next 12 hours. And they're talking about, oh yeah, you got to look at body language, you got to look at the terms the chairman uses. And I'm like, maybe, but maybe not. Maybe we could just like, okay, is it a 25 basis point cut? Yes. And what are the big facts? Are they seeing employment be an issue, or is it worrying the Federal Reserve? Are they seeing, kind of like the big facts? And let's not kind of get lost in like how he said something or why didn't he say this and what was the color of his tie. Oh man, I kind of don't pay attention to that stuff. Um, According to Polymarket, December 10th, we are 97% of the, I guess, the contract buyers are saying there's going to be a 25 basis point cut. If you wanted to go out on a limb and say 50, your odds, you'd make good money if you said, yeah, there's going to be a 50 basis point cut, because I think you'd be paid 200 to 1. That's pretty good payoff.
You're going
But
to have one Fed member that's going to vote for a 50, I guarantee you.
oh, definitely, because there's a number of them that are kind of interviewing for the job of the chairman, right?
Yep.
Yeah, so definitely there's going to be some of that behavior. Um, Looking at, let's see, no change. There's a 2% population of those who put some money down on that. How do I close this out? Maybe if I click it, yeah. And then a 25 basis point increase. If you bet on that, you'd be paid, I think it's 1,000 to 1. That'd be a good payoff. Of course, the stock market would like sell off by 3% on the S&P. That would be a huge surprise. But who knows? I don't think that's going to happen. I mean, very remote. And then from there, I don't want to look at the future rate cuts, because depending on what is decided today, what the comments are from the Fed, that's going to really strongly influence the rest of the other meetings that come down the road. And then this chairman is in office until May, and then we have a new chairman that's going to be assigned by the president. If that's what I think I remember. All right, so we have the rate cut. Stocks yesterday. Some stocks performed well. Some of the big caps. Healthcare had a down day, and consumer staples kind of showed up. So the market didn't move a whole lot, but there was some stocks that went higher. This week we have Broadcom announcing earnings tomorrow after the market closes. This is big. If they keep growing, their stock price is probably going to go higher. But if they show any sign of a stall in growth or a more conservative forecast, a lower forecast, then they're going to be under pressure. But we'll see. We'll see what they announce tomorrow and how the market reacts. And other like Micron went up. Apple was under a little bit of pressure. Adobe announces today after the market closes. And it's highly likely that they're going to beat on earnings expectations. And we'll see how the market reacts. Adobe, like Salesforce, has to, in order to get their stock price to go up, they'll have to really lean into their forecast and really communicate an optimistic outlook for their business. If they fall short of that, the stock's going to probably trade, around the level it's at. So here we go. After the market closes, we will hear from Adobe. We're also going to hear from who else was going to announce? Synopsys.
Costco tomorrow night.
Yep. Synopsys, after the market closes, they're a software company helping semiconductor companies test the semiconductors and really develop the next generation of chips. Tomorrow is even bigger. After the market closes, Broadcom, almost a $2 trillion market cap company, Costco. And what are you expecting out of Costco?
I think they'll beat on the top and bottom. It just, they're in a downturn because they're pretty much priced at a premium. And I think investors have become somewhat sensitized to the premium that they're paying. So they've had a downturn in their price basically since the end of last year. So, and they're still pretty highly priced, just like Walmart is. So,
yeah, I agree.
We'll see. There's a talk, and there is many years, but Costco pays a special dividend about every 3 years, and we're due for a special dividend this year.
Mm-hmm.
So that could be an announcement. And then just about every end of the year, there's a talk about a stock split, but I'm not so sure that'll happen. But I'm placing a little bigger odds that we do get a special dividend announcement this time.
Good to know. I didn't know that. Yeah,
Yeah,
Costco's like you said, it seems like it's priced at a premium in most times. And I haven't been a Costco investor because, I look at the stock and it's grown okay. It's grown better than Walmart, but it just doesn't have margins. It's a retailer and it shouldn't have margins. One of the reasons why consumers really like Costco is low prices. So, okay, there you go. And their membership program, that's where a lot of the profit comes from that they have. And I think that their ceiling is a little low. So there's just some factors there that I'm not willing to overspend, pay too high of a stock price for Costco. And I'd let other investors, really from the COVID time to 2024, the stock did well, but from 24 to now, the stock struggled. And probably, if you recall, during COVID, the lines at Costco were like incredible. People are camping out, trying to get in there and get their giant bundle of toilet paper and all the essentials they needed to hunker down. So I think that left an impression on investors, and they're like, boy, Costco's really valuable. And stock price did really well. Good for investors. But we'll see how they announce tomorrow. We'll see when Costco gets on another upward trend on their stock price, where we could see the stock price go up over time. Maybe it starts in 2026. Overall, in retail, for now, I like Target, and I think Target's a good opportunity. So we'll see how that stock performs over time. For sure, we can take a look at Costco when we stream on Friday morning and see what the earnings look like. I could do a new valuation on the stock, and we can talk about Costco. All right, it looks like we've got some people on the chat. Let me say good morning. So first, if you want more information on Daryl's channel, he put his channel information in the chat. Visit his channel, subscribe, get a lot of good technical analysis from Daryl there. Good morning, Zubio. I thought Salesforce had very good earnings, and their stock has appreciated nicely. So that one looks really good. So this is a question worth commenting on, is does this cut actually affect interest rates you get from a bank or a mortgage company? The short answer is yes, generally. But loans that we get on homes is dictated by the 10-year treasury rate. And that will kind of have its own kind of trend. And before we streamed, Daryl was commenting that although we expect this 25 basis point reduction today, he was seeing that the rates on bonds was going up, and that will increase your interest rate you would get on a loan if you bought a home. So in general, as you see the Fed lowering interest rates, in general, yes, it'll go down. Does it perfectly go down at the same rate when they're doing these cuts? No. Mortgages are dictated on the 10-year treasury, and that is a market-driven metric. As investors buy those bonds and there's big demand on the bonds, that means the price goes up of the bond and the interest rate falls because there's more demand, there's more takers, so the yield can go down. Opposite, if there's less investors in that 10-year treasury, that means there's a lack of demand, so the interest rate will rise. And when it rises, mortgages will rise. So that's what we want to look at. If we want to understand what our mortgages are going to cost, is the 10-year. Any comments you'd add on to that, Daryl?
Yeah, I can show you a quick chart. So you can see the Fed funds rate has been going down. So we were at 5.35, and now we're at 3.88. But you can see that the 10-year has actually stayed pretty flat. So they don't control this 10-year directly. They affect mostly the 3-month and the 2-year and the 1-year, but they don't really control the 10-year directly. That's more controlled by the bond market. So they've been pretty flat, while the Fed funds rate has actually been going down, and I think this is primarily driven by tariffs and primarily by tariffs and inflation. So
Got
anyway,
it.
we'll see if they can eventually pull that rate down, but we were as low as
In 2020,
yeah,
COVID.
0.82%. We
Yeah.
did hit a peak of 5, and now we're sitting at about 420. We were at about 3.85 just in August. So the rates have actually gone up on the 10-year, even though we've had a rate cut.
So go back to the 2020 era. All right. So what I did, I took advantage of those low interest rates. So this home, we pretty much were like about to pay off the house, but I was able to get a either 2 or 2.5 or 2.25 mortgage on this home. And as an investor, I'm like, arbitrage. So
Yep.
I pulled a pretty good sum, and I immediately put it into a bond portfolio. And that bond portfolio is earning, call it 5.5%. So the difference between 2.5, 5.5, 3% arbitrage. And it makes me about $9,000 a year. So that was the move that I made there. I thought it was like, and the worst case scenario for me was, all right, if my idea begins to backfire, I just return the money back to the bank and pay off the house. But it actually is like, oh no, I just created a nice little annuity for me, and I'm in control of the capital. So thank you, market, for being wonky, lowering rates at a crazy low level, and giving me the opportunity to make some money. But we're higher rates now. That environment, I don't know that we're going to see that environment for a while. Hopefully we don't see those high interest rates. And what is that peak way back there? Is that like the 80s?
Yep.
Yeah, I
Yeah.
remember my
So
mom bought a house in the 80s, and she was telling me that her interest rate was like 18%. That's insane.
yep. Yeah, the Fed funds rate was 19% back in there.
Oh my God.
My
That's
first
back when we
house.
had like really bad inflation, and the chairman was like, all right, this is going to be ugly, but we're going to get inflation down. And he kind of, he broke a lot of industries, so to speak, to make sure that we got inflation down.
Yep.
Yeah. All right. Let's hope we don't have to deal with something like that. All right, cool. So good question on that. So everybody, if you're new to the stream, welcome. We're going to go over stocks in from two different perspectives: fundamental analysis, looking at, is this a good business? Is it an attractive, desirable business? And a good way of doing that is you compare it against kind of like a gold standard, or compare it against a company that we know what great looks like. For example, we know that Nvidia is a great business. It's the most valuable business. So when we look at this business, we look at it and say, is their top line revenue growing? Are more customers wanting to buy their product? Are countries like China just begging to buy their product at a very high price? Yes. Well, that's a very good attribute. And do they make lots of money when they sell that revenue? Yes, 75%. And then they get to keep 55% in the form of profit. And they get to keep 46.6 in the form of free cash flow. So this is what great looks like. So when we do fundamental analysis,
You
we
want to
want to
share
look at
your
the,
screen, Victor?
yeah, thanks for letting me know. It's early, everybody. And so what great looks like is top line revenue growth, really big margins. So it creates a very valuable company. And as we go through fundamental analysis, we'll see how does that stock measure up to what great looks like. We'll do a valuation on that stock based on discounting of free cash flows that we expect in the future, discounted at today's value, and then compare it against the current stock price. My investing plan is to buy stocks when they're priced low and watch them go higher. Not a very original idea. I think a lot of investors are trying to do that, but I try to put the analysis in to better my chances of achieving that, and it works. Now, I do the fundamental analysis, and then Daryl looks at the technical aspects of that stock. How has it been trading? Is it trending higher, trending lower? What are some factors that investors can keep an eye on to see if there's a particular time when buying a stock is really a good idea? And when you buy and how you buy and the price you paid is critical in outperforming the market. You can buy a great business at the wrong time, pay too much. So congratulations, you own a great business, but you're not making money. I'd rather own an okay business and make a lot of money. I don't care about, owning shares in really popular companies. I care about the bottom line, outperforming the market, making money, increasing the value of my portfolio year after year. So that's our whole effort in this live stream, is looking at stocks from those two perspectives. Looks like Benton is back. Good to see you. You want to look at Chewy? It's down 24%. 4% price to book looks suspicious at 37. All right, let's take a look at Chewy. We'll look at Chewy, excuse me. And I think Chewy does pet stuff, right? Are they the ones that do e-tailing for pet stuff? Yeah, that'd be a good one. So Benton, we're going to get through a couple stocks, and then we're going to cover Chewy. Great to see you. Thanks for weighing in. All right, so a stock that I wanted to kind of get going with is AV, which is AeroVironment. Now, something that's really helped this stock and really the defense industry is the narrative that, hey, there's going to be more spend on defense. And I agree with that. That, hey, European countries are going to have to buy more defense-related products and to defend themselves. That's a given. The other big story that's helped them is, for the most part, AeroVironment is a drone manufacturer. Well, drones are become a big asset for the military. And really, I would venture to say 40 years ago, we had no drones. Now we have, countless number of drones in the military. So those two things are good themes that are going to help AeroVironment. Now, AeroVironment, we know what they do. They do those types of things, drones, and I think they do it quite well. And their stock price really went up, but it's under pressure. What is going on? Why is this stock coming down? Went from 407 down to 281. How you buy, when you buy is really important. If you buy at the wrong times, not good. If you buy at the right times, very good. So as I looked at this stock, and I looked at it about a month and a half ago, and I called out that I thought this stock was too expensive. They announced their earnings yesterday. And what investors are realizing is, hey, maybe this stock was priced too high. Because again, back to kind of like the general rule of thumb, we know what great looks like. High growth on the top line and high margins. So the growth that we're seeing from AeroVironment is very good. I mean, the quarters look phenomenal. How is that? We're only 14% on the annual trailing 12 months. So we're seeing high rates of growth. So that looks really good. Now, where defense kind of loses my interest is once we get down here, this is where it kind of, I'm like, wow, I want to buy a business that has really low gross margins and then it loses money. I mean, we're in a boom cycle. Why are you losing money? Kind of nuts. So it's very hard for me to value these guys at a very high valuation because they just don't make a lot of money and they're burning cash. So all in, I'm like, yeah, this is a business that's caught up in a story. The military is going to buy more. There's going to be more investment in drones. I get that. But this is a situation where you're selling $100 bills. You're selling them $100 bills. And the customer is paying you $80 for that bill. So yeah, you got a lot of customers that want to buy $100 bills from you. I'd like to buy 10, please. And then they pay you $800. Well, you're losing money just out of the gate. So it's not a business that I really like. And I shy away from these situations. I'd rather have it. I want to eat my cake and have my cake and eat it too. They're going to continue to grow. Congratulations. There was probably an acquisition that they're integrating to the business, and that's for the high growth. But this will never be an Nvidia. They just don't have the gross margins. They don't have the structure to deliver the kind of value that an Nvidia or a like company like Nvidia is going to do, which is why I called out that, hey, AeroVironment's priced too high a month and a half ago. And I released a video to members of my channel, kind of giving my analysis on AeroVironment as well as other, and I don't have a valuation on them because there's no valuation to calculate when you have negative cash flow and a company that's losing money. So those are my comments on AeroVironment. It is not a pretty picture, and I don't know that the picture is going to turn positive anytime soon. If you have the Ukraine-Russia conflict cool off, get a peace treaty, what's next for AeroVironment? It's not going to be good. So those are my comments. What are you seeing with AVAV, Daryl?
So we're looking at a 1-year daily price chart. And I see a line of support here around 220. And that's in this green dotted line. And I see a couple resistance points. One is at the high on the 30th of June. That was established. They broke above that and traded up to 417 or so. And then they broke back down through this prior, which would have been a support line, but now it's back to resistance. They traded back up to it yesterday, and today they're down 7.95%. The 200-day is rising. The 50-day is decreasing at this point. The 21-day is decreasing at a pretty rapid rate. The 5-day had been showing some promise. What was announced yesterday on this company?
Their earnings.
Okay, so their earnings are down. So they were showing some positive price action going into the earnings, but now they're trading back down. Right now, they're trading back down to where they were. They opened higher than they're trading right now, so there is some selling pressure. It would not surprise me to see the 200-day come into play or this support line here. They have an RSI that is declining, and that was after being in an oversold condition for looks like 3.5 weeks. They rose up to an RSI of 40 and was rejected there and being pushed down again. The PPO is in bearish territory. Another day or two of action like we're seeing right now, and they're going to have a bearish crossover and see worse performance. So that's kind of what I'm expecting at the moment. The money flow went into bearish territory. So I think they have some weaker prices coming their way.
Yep, I agree. And there's certain themes that really capture the investing community's, attention. Definitely when we saw the conflict in Russia, Ukraine, and then President Trump commenting that, hey, he wanted European countries to arm themselves, that created correctly like, hey, there's going to be bigger demand in this space. That totally makes sense. It's just, let's know what we're buying here. Are we buying, a low margin business or a high margin business, and then invest appropriately. Anything else on this, Daryl?
Nope, not from me.
Excellent work, sir. Thank you. All right, so let's keep rolling. Looks like Shadow Guy is with us. Good to see you, Shadow Guy. He thought it reminded AV reminded him of a VC opportunity with a drone startup. Yeah, drones have really gotten a lot of attention, and definitely for defense, they totally make sense. I think Ukraine has been using them quite a bit, and so has Russia. Totally get it. I'm also seeing stories of how drones are going to do deliveries, and that one I'm not completely sold on, because drones are so darn small that they're going to deliver these small packages. How are you going to make it economically feasible to send a drone and maybe it goes to and from one location in a half hour? So it's making potentially 40 deliveries on a day. Are the economics there? I don't know. I think it's neat to prove out, but I don't know that we're going to have all that much volume of it. And it is kind of a scary thought, right? I live in Southern California, and right now we see a lot of electric bikes, e-bikes, and they're everywhere. These young, usually youngsters are flying all over the streets, and these things are pretty quick. They're like 25 mile an hour, 30 mile an hour vehicles. Well, if we have drones flying all over the place, is that going to be a comfortable picture to get our heads around? Any thoughts on what you think of this whole drone package delivery idea?
I don't know. I know they're deploying it in several areas. I know up in northwestern Arkansas, where Walmart is headquartered, they're using drones to deliver. Probably as an experimental phase, if I were guessing. I've never seen one actually do a delivery yet, so I've only seen videos. I have never seen one in person.
I mean, I've seen videos, and the payload is tiny. Like I guess a payload that would make sense is like prescriptions, because you're getting a little small package anyway, a little vial, and but you only have certain products you can put in there. You couldn't like, hey, I need a car battery. Drone isn't going to be able to handle that. You need a helicopter to kind of deliver I don't know what a car battery weighs, maybe 50 pounds or so. And so that's the thing that I look at it and I'm like, well, it's not kind of an obvious great idea, or it's not obviously a business model that has great potential. For example, robo-taxi, that has great potential because you have hundreds of millions of people, maybe a billion people that would want a taxi ride. Now you have robots driving people from point A to point B. Hey, 24/7. Hey, that makes sense. So you're kind of disrupting a current model that is quite a big part of economies. So that makes sense. All right, taking a peek at the heat map. Looks like Meta is under pressure again. That is a stock that I put on the list for Daryl and I to take a look at because it's been a couple of days of Meta being under pressure. I want to understand what's going on. What is going on stock market? Other things I'll point to, Netflix continues to be under pressure. They're trying to acquire Warner Brothers, and now Paramount has said, hold on, time out. We're going to do a hostile takeover of Warner Brothers. And the plot thickens. Right when the situation was somewhat determined, we are going to have a little bit of arguing going on between Paramount and Netflix. It's going to get a little ugly, probably take a little longer. And we got Microsoft under pressure. Why is Microsoft under pressure? That is interesting. You have any ideas on why Microsoft is under pressure?
I don't know right off the top of my head, to tell you the truth. I know they're overpriced at the moment. So I said in a video that I did either Monday or Sunday that I think investors right now basically since October are becoming a little sensitive to valuations. I'm seeing
Good.
that in Costco. Yeah, that's true. And it could be that Microsoft is also being impacted by that because I think they're at least $60 off of my intrinsic value, above my intrinsic value calculation. So,
Got it. Palantir is going higher. Uber has been under pressure for a couple of days now. Looking at staples, Coke and Pepsi. Pepsi is getting it done today. And household personal products is in the green. Specialty machinery, GEV is up 14.8. Wow. Incredible. Amazon is up. Some spots of healthcare are up. Let me refresh. Energy is up a little bit. Real estate is up. All right. So I agree with your earlier comment that the market's beginning to look at valuations and make it a meaningful factor in investing decisions. And Microsoft and you name the company, Nvidia sold off. I think they began to look at the price and go, whoa, how are we seeing that valuation makes sense? And I think they're being a little more careful on stock price, which is good. It's good for the market. We don't want big bubbles to pop and then it creates a bad environment for 5 years or so. So if these bubbles could kind of lose some of their volumes, lose some of their pressure, nothing pops. So that's good. That's really good. All right. So we're going to move to DLR. That is Digital Realty Trust. Before I jump in there, Magical Self, good to see you again. Allstate is down today. Is it still a buy? Well, spoiler alert, I'm going to say yes, but in a little bit, I'm going to tell you why. I put it on the list, Magical Self. I'll show you the details behind that comment I just made. And looks like, let's see here. DJ is on. Give me a second here. Let me make sure I don't lose anybody. Okay, DJ, good to see you. So in China, In one city, larger packets are being delivered through drones. We'll see. I could be like amazed, and my intuition could be wrong. It's just you get drones up in the air, a lot of bad things can happen. Darn things can hit a power line. I probably never mentioned it, but probably a month ago, neighbor behind us, we live in an unincorporated area in Southern California, and we have a lot of trees. That's what makes the neighborhood really nice. Well, they were getting their trees trimmed, and my high-speed fiber line goes through those trees, and they cut the line, and it's like our internet went dark. Boom. So, oh no, call AT&T, and to their credit, 24 hours later, we were operational again. Well, if you have drones flying all over the place, how many power lines are they going to hit? How many communication lines are they going to hit? Is there going to be a problem with, there's just a lot of things they got to work out. I'm sure there'll be some use cases where, hey, if a hospital, here's a use case that makes sense, is a hospital needs, some kind of drug immediately. Boom, put it in a drone, get it over to that hospital. It lands on its roof. We're good to go. But that's like an isolated use case. I need a bag of corn chips from my favorite corn chip retailer, which is Trader Joe's. I don't know that bag of corn chips is high value enough for a drone to get in the air and bring me my bag of corn chips. I don't think that's going to be the case. So, but we'll see. I think the world's going to evolve before our eyes. It's good to see you, DJ. Shadow guy. Yeah, could you imagine drones being hacked? Yeah, exactly. Exactly. Navigator _9. They're delivering pizza in Dublin, Ireland via drone.
I would love
Oh
to
my
see a
God.
video of that navigator. You'll have to figure out how to get a video to us. I'd love to see that.
Imagine that. You're like
Yeah.
watching the football game, and let's get a pizza delivered. And you're watching, this is the ultimate, which is you're watching a football game outside because it's Southern California, and you're watching it, and you order a pizza and it delivers it to your backyard. Okay, that is kind of a game-changing moment there. All right, we talked about Allstate. We're going to cover Allstate in a little bit. Rumor: Microsoft had to cut their salespeople because Copilot is not selling. That is the same story I heard. That is the story that I've heard, that investors are like, well, we were buying the stock because we thought they were going to kill it with this AI product. But it sounds like the AI product is not being bought and then used, and there's not perceived value out of it. And that's a problem, because that means that next year, fewer companies will be buying the product. Benton, this could be a silly question. Do you set limit prices when ordering? Both. So in some cases, like, I will put a limit price, and especially like I can't buy pre-market or aftermarket without it. And in some cases, I just like to operate that way. But in most cases, I'm waiting. I know the stock that I want to buy, and I'm waiting for the market to move. Giving you an example is what's the stock I'm buying into? Target. I talked about Target earlier. So I know I want to buy Target. Okay. Now, this one here, I started saying I'm going to buy Target here. Now, I think it was a good idea so far. And the market's just not letting me in. The good news is I think my analysis was good, because the market's beginning to, go higher. But if I see Target move down, I buy. Boom. Boom. So that's more market. Just buy it. Boom. We're good. And some stocks I'm ready to do that. Some stocks I want to accumulate, but the market, and it might be Target. I could put a limit price on Target. Maybe, hey, I'm willing to buy it at $94.10. And if it drops down to that during the day, boom, I bought some shares. So that's how I use it. How about you, Daryl? How do you use limit prices or just buy market prices?
I probably use limit pricing probably 85% of the time, because when I go to buy a stock, I have a set of charts that I move to. I can show you those real quick.
Yeah.
So let's so these are my intraday charts that I use. So once I decide to make a purchase on one, let's just say it's Nvidia, then I move to a 15 bar chart move, and I can tell where the prices are headed. So it looks like right now the price is below the 5-period average and the 15-period average. And the longer term average is actually trailing downward. So I think probably some lower prices are coming. So I would set a limit price, on this one down below here and just wait for it to come to me throughout the day. Sometimes I miss them, but quite often they fire and I'll get them, cheaper than what they're going for at any point in time. So I switched to intraday charts when I've decided to make a purchase, and I use these to set my limits.
Excellent. Thank you, sir. Okay. So, Mike, we've got OGN on the list, and I added DSP. And we're going to get through a couple of stocks, and then we're going to hit OGN, and then we'll hit DSP. Let's go Adobe. Dwayne, good to see you. Yeah, let's see what Adobe announces. Let's see how the market's mood around Adobe. Adobe's going to announce after the market closes. Right now, it's not going up or down. It has caught a nice little rally, and it could thank Salesforce. Salesforce had a very good earnings report, and this stock since November 20th is up nicely, maybe up about 10%. And it's, we'll see what they announce. It's a good, back to the compare it to great. We saw Nvidia, high revenue growth, high margins, high profitability, high cash flow. And Adobe doesn't have the growth to say that is great growth, but it has good growth. 10.8% on last year, 10.6 this year. It's a pretty sizable business. So the growth is good, but not great. But once we see their other fundamentals, these are great fundamentals. 89% gross margin, profit margin 30%, free cash flow margin 41%. This is in the great template. Okay. This is like high profitable business. They're growing by a little over 10%. The story that's been ailing the stock is AI is going to hurt them. I don't agree with that. I think AI is just going to be a new product set for Adobe. If they can come in, man, if they came in with 11 or 12% growth in the quarter, this thing's going to go up 10, 20%. If on the flip side, if they come in with 8, 9% growth, we got problems, people. We got problems in a stock that has plenty of problems. It's not a warm and fuzzy situation here. It's been selling off because the market's thinking or maybe theorizing Adobe is going to be replaced by AI somehow. People are not going to need their tools to create content, marketing collateral, that kind of thing. I just don't think that's meaningfully an impact. I think for now, everything's the same. And I think Adobe can use AI to make more products, expand their portfolio of products. So yeah, let's go, Adobe. Let's go. Fortinet is down. I just bought some shares. I buy Fortinet every time it's down. Yeah, I'm accumulating Fortinet. I think it's the next cyber stock that I'd like to own. I own it. I want to own more. Yeah, thanks for weighing in, Benton. Thanks for the question. DJ. What'd be an entry point on Meta? We're going to cover Meta. So I'm going to hold my comments on that and give you a full review of Meta, and then we'll talk about that. Peyton, good to see you. Yeah, you're right that Adobe has gone down on positive earnings. Now, what happened last week with Salesforce is Salesforce immediately after their earnings, I think traded down a little bit. It was kind of either trading down a little bit or not really moving. And the following day, during the day, it really caught a bid and it went up 5%. What also was very meaningful is the day after that, 2 days after they announced, stock went up 5%. And Adobe was rising with Salesforce. Adobe didn't announce earnings. So to me, that signaled the market is now interested in software companies because they're buying into Salesforce and Adobe, at the same time. Having said that, I think if Adobe delivers good earnings, the stock will rise. We're back to good news is good news. It should be good news. So that's what I think is going to happen. Again, Adobe has to deliver good earnings. They don't deliver good earnings, doesn't matter. Victor, have you and Daryl checked the Adobe options price to see where it is, I guess? Yeah, so
7.5%.
What are you referring to, sir?
The earnings implied move from the options chain.
So 7.5%, it could go up higher or lower, right?
Yep, plus or minus.
All right. And I think if they have good earnings, yeah, that makes sense. That makes sense to me. Okay. All right. All right. Good to see you, Peyton. Very good to see you. Let's get back on task here. I wanted to look at Digital Realty Trust. This stock, they run data centers. I'm sorry. They're a real estate investment trust that owns properties that are data centers, and they rent out the space to companies that want to run their workloads in their data center. So they're a landlord. They're a landlord for data centers. Now, if you would have told me, and I've been an investor in DLR before, and I did well with the stock, it pays a dividend, but the only problem in my investing decision here is I sold maybe a little too early, and it kept rising because I invested at the right times. Now, high level, I think that, well, if you own data center properties, you've got to be doing great because you probably have excess demand and you can raise your prices and you have full occupancy, all that good stuff. But the stock hasn't really killed it, right? It's up 20% over the 5-year. It's down over the 1 year. What is going on? But we have this AI build out. All I hear is we're building data centers, we're building data centers, we're building data centers. Here's a data center REIT. Why are they not on fire and their stock price is up 100%? Weird. Market cap, 57 billion. They pay a dividend of 3%, and they can afford to pay that dividend. Analysts think it's discounted. As we look at their forecast, be interesting to see, are they growing? They definitely are. Look at this growth in a real estate investment trust. That looks interesting. Now, somehow, some way, they're going to reduce their earnings per share next year. Why is that? Are they writing something off, or not sure why that's happening? Their PE ratio is a little high, and it's coming down to what should be like real estate investment trusts should not have high PEs, in my opinion. And 22.9 would actually be a little high. Most definitely, these PE ratios are really high. So this is an idea that I've been kicking around. It's a good dividend payer. I think it's probably going to go higher in price. Real estate investment trust, I don't use free cash flows because it's not the right way to value them. But I think this one here, it was a part of a best and worst real estate stocks video. It priced quite well. It priced at a discount. Its valuation looked pretty decent. So it's an idea that I've been thinking about as I look for lower risk stocks, maybe as I get older, trying to find stocks that do pay an income. Overall, I'm seeing a discount of 18% on DLR. And when I compare them based on other fundamentals, they rank in the middle. The best ranked REITs, number one was Vici. Number two is CTRE. And these guys are in the middle of the pack. So maybe not quite where they need to be from a pricing perspective. And I just thought it'd be interesting to cover this because if you got a company that is a real estate investment trust focused on the data center exclusively, why aren't they going up much higher? I mean, you got Broadcom going up. You got CoreWeave has had its moments where it's just going up just vertically. But the company that owns the building is not rallying, which is a surprise. Any thoughts on DLR? What are the charts showing for DLR?
Now let me go to the stall out right around 180. They are trading below a downward sloping 200. The 21 day is rolling over. They're trading below the 5-day at the open today. The 50-day is also down sloping. They have a declining RSI, a rising PPO, but it looks to be stalling out a little bit. Accumulation still looks really good. They're at a 52-week high. Money flow is positive at the moment. The sell-off starting here was all related to the Federal Reserve Chairman's comment about don't count on a December rate cut. So that's what drove these down. And then the last week and a half, when hope of a rate cut started coming back in, it started going back up. And today, I bet you, if I go and look at the 10-year yield, it's probably going up today. So we'll look at the treasuries.
And interest rates matter a lot to REITs because a lot of their projects require financing.
Yep. So it's actually down one, but if we look over last 5 days, you can see what the 10 years been doing. It's been going up. So I don't know if that's affecting them here for these 3 days here. I know it's been affecting some of my real estate holdings. I don't own DLR. I own WPC, WP Carry instead. So anyway, this is one that probably being affected by the 10-year rate and also the Fed chair's comments.
Yep.
Here. So I don't know if we're going to find a a big upside. Looks like about 180 is the upper end over this 1 year time frame.
All right. Good to see. Thank you, sir. All right. So here's the heat map on the market as I speak. And Microsoft still under pressure. Meta still under pressure. Amazon's up nicely. And overall, what's the market looking like? It's pretty flat. S&P is flat. NASDAQ is under some pressure. It's probably Microsoft mostly in Meta. Microsoft and Meta can really make a difference here. All right. So let's take a look at Meta. Meta is under some pressure. Looks like it's been under some pretty good pressure last couple of days. And it's and I think the question that was posed earlier is what would be a good entry price? So let's keep that in mind, and we'll answer that at the very end. Let's go through and take a look at this business. So they're down 3 days. Okay. Are there some stories out there? No, nothing. No smoking gun. So Ace's Pest Control announces nationwide rollout of Meta smart glasses to enhance pest inspections across Auckland. Very cool. Okay. So overall, Meta has been a good stock, most definitely, especially if you bought in this era. You're just, you made a lot of money and you deserve it because there was a lot of doubt in this section of their chart. But what would be a good entry? Now, I like that we had a pretty nice pullback from 785 and we're at 673. This stock has a PE, forward PE for 2026 of 22.35. That's very rational. Seems for a company that is growing well. Let's remind ourselves, what does great look like? Well, you have high growth. Now, this is not Nvidia-like growth, but 26% on a $200 billion business is great. That show me all businesses that are $200 billion or higher, and Meta is going to be top 3 in growth. You're going to have few businesses ahead of Meta in top line growth. So we have the top line growth. And we have high margins, high profit, high cash flow. So this is in the category of, this is close to great. Okay. It's good business. So we got that squared away. It's a desirable business. How are they going to grow going forward? So these guys are all over AI. They're trying to figure out how are we going to take AI, create an opportunity out of it. So these numbers probably don't include any of that AI stuff because like the glasses are physical AI and they're going to keep growing. Now they're a big outfit. For 2026, they're going to become a $240 billion market cap company, eventually growing at $300 billion, making all that free cash flow and profit. And they're going to grow that profit nicely, bringing down their PE ratio to the teens. That is not going to happen, folks. It's not going to happen. This stock should trade 25 or higher. It's just too good of a business. I just showed you the fundamentals. Fundamentals point that these guys on a spectrum of good, or I should say bad to great, these guys are on the great side of that spectrum. They're closer to, that pack of great companies. So if you're going to give me a PE eventually of 18, I will buy left and right. I've been buying Meta. So when I look at evaluation of Meta, I think it's discounted right now. How am I buying into Meta? I already own a lot of Meta. Meta's well over 10% of my portfolio. So it's a big position. And I'm buying shares because I see that this pullback's an opportunity. And I'm buying shares. I'm a dollar cost average investor for this reason. The market from time to time has its moments where it discounts a great business, and I want to take advantage of it. Yeah, I'll buy some more shares of Meta. So I'll buy shares of Meta today. So how I enter a stock is dollar cost average. That's how I do it. Not saying you should do it. I'm not recommending you should do it. I'm just telling you that's how I do it. And right now, Meta's a buy for me, and it's discounted. But let me kick it over to Daryl. Take a look at the charts on Meta.
Yeah, I've been watching this one very closely. And we had this resistance line drawn at this gap support when they did their last earnings. They dropped down to about right here, and that became a resistance point. They came up and tested that almost with a penny on the day when they announced that they were going to cut the metaverse budget by about 30%. They shot up 3.4%, and they have not been able to sustain that, and they are gapping down. The last 3 days have been gap downs. They're trading right above their 21, which is still increasing. They are trading below their 5-day moving average. They closed below it yesterday, and they're trading below it today. So I'm watching this gap. If they close this, well, they're almost doing it today. If they close this gap, that could be a little bit of support. So keep an eye on this and either buy today or wait another day and see if it comes back down and see if it can recover off that gap up, because there's gap support about right there, and that's pretty much where they're trading. One thing I pointed out last time is they have failed to get above an RSI of 60. The last 3 times they've been on a run, they stall out at 60. Notice back here they were getting up to 70, or even in overbought territory. They'd come down and test the 60 and be right back up. They have not been able to do that after this last run right here in August. They come down, they don't quite get to the 40, but they fit above the 60. That's happened 3 times, and they're being rejected right now. They're back down to the 50, which is pretty neutral. They do still have good PPO, the barely in negative territory. So I see the histogram is starting to decrease, so they may not make it into bullish territory here, but they did have a bullish crossover in bearish territory. So I'd keep an eye on this 20, see if it can bounce off that 20. That would be gap support as well.
Excellent. So I went ahead and bought Meta while you were on the charts. All right. So there was a question. DJ, Google versus Meta. Which one is better by now? Meta. And what's interesting is I would say 7 months ago, I was asked the same question by another investor, and my answer was Google. And Google's gone up a lot in the last 7 months. And so now the tables have turned, where back then Meta was flourishing. Google was, the market had it in its head that, oh man, AI is going to hurt Google. Google doesn't have as strong of a future as OpenAI. So when I was asked about that previously, it was like, hey, Google's really beat up. And now Meta's being beat up, really separated itself from Google. So today I bought more Meta and I hold Google as my biggest position. So it's not like I'm hating on Google. I love Google. Keep going up higher, Google. I'm good with that. So thanks for asking, DJ. Great to see you. Man, we got the chat is exploding. Everybody's on chat right now. Let me try to keep up with it. If I miss your comment, I apologize. I've been known to do that, and it's not on purpose. It's that I miss a comment here or there. So buying into Fortinet, I am as well. We covered that. Covered the options question. We covered this question too. Good to see you, Peyton. All right. So Uber getting killed. I keep buying into Uber. I just bought more shares. And we're going to go over Uber in a little bit. I want to get some of the requests out of the way, but we'll come back to Uber. For anyone still holding RELY, it's rising today. Rising today. Time to ring the cash register on Rally. What's going on, Rally? Remitly. These guys do payments, or what do they call it? Wire transfers. Well, the year to date doesn't look great, but it has been rising. If you bought here, yeah, you can ring the cash register and make 20%. All right. So that was Remitly. I think you're referring to Meta. I don't know. I think overall growth is good for Meta. So Mike's looking for a lower price on Meta. Well, the market's trying to serve you up a nice price. We'll see if it gets there. So Google's product roadmap makes a lot more sense to me than Meta. I agree, but just remember, it's about when and how we buy stocks makes a big difference versus what we buy. We know, okay? Now, I agree with you. If I was only allowed to buy one stock that I was going to hold for 10 years, it'd be Alphabet. Why? Because they have excellent products across different markets. They have their search, they have their cloud infrastructure business, they have YouTube. These are dominant businesses, very good businesses. Now they have Waymo and they have other businesses that are cooking up. Meta's, more narrow in their product, offering in social, but they're very dominant. I agree with that, but it's about when and how. If you offer me an awesome discount on Meta, I'm all ears. I'm going to buy Meta. So I think I'm going to make more money that way because stocks will prove to us that at certain times, for example, you could have bought Meta at a better discount than Google and outperform Google. Now Google at a certain time, you could have bought Google at a better discount than Meta and Google outperformed Meta. So let's think about how we're buying and when we're buying and what price we're paying, as well as the quality of the business. So Kevin, good to see you. Thanks for the comment. All right, so let's get back on track here. This hit OGN, which is a healthcare company focused on women's health. It was a spinoff from Merck some years ago. And this business has not had a fun experience becoming a publicly traded company. I think conceptually this business makes a lot of sense. Yeah, you focus on women's health, but the stock's just been on a decline 77%, and it's a small cap, 1.8 billion, revenue of 6.3 billion. So the market's not even pricing it 1-to-1 price to sales, which is lack of confidence, I guess, from the market. PE ratio under 2, discounted by 100%. Now, I'm going to quickly go to the balance sheet because my memory tells me they have some debt, 8.83 billion. Debt to EBITDA 5. This one here is a problem. What does great look like? A great balance sheet looks like a lot of cash and no debt. That's what great looks like. The opposite of great is a lot of debt. These guys have a lot of debt. So that's a big risk factor that I consider as I look at a stock. These guys are beginning to grow. So there's a tiny bit of growth, 1%. Geez, these guys can't grow very well, it seems. And you'd think with the greater focus, they would do a better job of selling their product. But maybe they lost, when they were part of Merck, maybe they had some advantages of being part of a bigger selling organization where their product was kind of included in these big deals, and they're no longer a part of those big deals. Free cash flow is positive based on this type of business. See, this is where we're going to have trouble with this stock. This is trailing 12 months. They're not growing. They have a bad balance sheet. So let's say I multiplied this times 10, I'd get to just round up 8 billion. And then I decrement the debt on the balance sheet, which is 8 billion. So the actual value of the business to me is like zero. It's not worth much because of that debt on the balance sheet. And gross margins are decent. Profit margins, okay. Free cash flow margins, okay. It's just that debt. They've been saddled with that debt. How can they get rid of that debt? It's going to take a while. You have close to $800 million of free cash flow. You have in excess of $8 billion of debt. It's going to take you literally 10 years to pay off that debt. Not good. It is not good. So I think that's what prevents me from going into Organon. If I'm going to play the small caps, I want to see growth. I want to see my stock go up 100%. I just want exciting. This one here just doesn't have that. They have a small dividend. This one here, man, that debt is what kills me, and I am not interested in Organon. Any thoughts on Organon, Daryl?
Yeah, I see several problems here. One is look at the volume. Price runs from about 9 to 10.10, 10.16 or so. So what do you think's going to happen when this price gets anywhere close to $9 or $10?
A lot of selling.
Yep. There weren't many buyers. There were a few. It got down to even a better price, and buyers didn't step in very hard. But there was a lot of buying right here. Do you see where that volume buying hits this trend line? It's almost dead on it.
Mm-hmm.
You see where the 200 is, dead on it. and it's declining. 50 days declining, 21 days declining, 5 days declining. This one looks pretty ill to me, and I don't see much hope for it. Because as soon as it gets to $9.50, you're going to have a bunch of sellers coming back in.
Yeah, it's got plenty of problems. All right. Anything else on OGM?
There's got to be a price where it finds some good support, but
I know.
this doesn't look like it.
Interesting. All right. So quick peek at the market. We're going to move to Chewy, which was a request from Benton, but just taking a peek. Not a lot of change. Uber, man, under pressure. Netflix continues to be under pressure. Microsoft's under pressure. And the market is flat. Okay. All right, let's get into Chewy. $14.5 billion market cap. It's gone up a little bit. Boy, it was really rising around this coming out of April. And this stock was really high. During COVID, a lot of people got a pet. They wanted some companionship at home. They were, sent home from the office, and a lot of people got pets, and they take care of their pets. So this was just really expensive stock. I continue to believe that people love their pets and will take care of their pets. So I think this is a good business. Now, as soon as you say e-commerce, you need to assess, is Amazon going to, in essence, erode Chewy's market share? Or will Chewy constantly have the right catalog, the right experience for pet owners? I think to an extent, yeah, that specialization will give them a better relationship with their customer than Amazon. Amazon does everything. And do they do pet well? They probably do a decent job. They probably do a good job. But Chewy probably does a great job. So forward P 24.44. Discounted. Let's see if they're growing. So on the quarterly, looks like their growth looks good, 8.3%. They had kind of hit a little bit of a slow period year and a half ago, but they're kind of they're making it happen. That looks really good. And they're going to go into the fourth quarter. Okay. I have to imagine that gift giving, right? If you know that one of your loved ones has a pet, you can buy them a gift that's for their pet for the holidays. Totally makes sense. So trailing 12 months growth of 10%. 10% isn't bad. That's pretty good. Free cash flow, 487. Low gross margins. They're an e-tailer. Profit margins low. Free cash flow is low. All right. What am I willing to pay for this business? I would probably pay 20 times to 25 times. Let's go 20 times free cash flow. Rounding this up to 520 times would get me to 10 billion. 10 billion minus debt or plus cash. And how much cash or debt do they have? They have a little more cash than debt. So 10 billion it is. But they're being sold if you bought the whole company for 14 billion. So they're 4 billion too high. So this stock's not discounted. It's priced too high. And although they're growing by 10%, their margins are not good. They're just not good. Showed you Meta at 30% net profit, showed you Nvidia earlier, net profit at 53%. That's what great looks like. The opposite of great is 1% profit margin. That's what Chewy has. So pass. It's not an investment that I would own. It's not a stock I would want to carry because it's just, will it be worth a lot more in the future? No, and not my opinion. It's like, show me $2 billion of free cash flow and I will be buying your stock, because then it would be highly discounted. But I don't know where these analysts are coming up with 30% as a price target discount. So Chewy not looking good. What are you seeing on the charts for Chewy?
So I see a downtrend line. We just have it connected to two places. It started back in June. That's going to serve as a point of resistance along with this 200-day moving average. As you were speaking, I was watching this bar because it was flashing between red and black. And what a black bar means it opened above yesterday's close and is trading above yesterday's close. So the whole bar is shifted up. When it shifts red, it means that it traded down to within the range that we established yesterday. So I'd never actually seen that happen live, but as I was watching the chart, it was flashing red and black just a few moments ago. So anyway, it has some resistance coming up on the 200-day. It's getting rejected today and pushed down back below the 50-day moving average. So I don't know what was so exciting today, but it didn't last very long. We could probably look at the intraday real quick. Yeah, whatever happened whatever happened this morning did not last very long. So
thank you, Daryl.
Let's get back to the one day. I do see support down here that's established all the way back to 10 March, and it's been tested at least 2 or 3 times. So that's the support line, probably be a pretty good buy price, but it's under pressure at the moment.
Thank you, sir. And let me comment on something that, I hope as viewers of our stream, when I have negative comments on a company like Chewy, I'm really talking about the numbers. Okay. And to me, I'm giving you an opinion on on the numbers. And if the numbers are good, other numbers are bad. And I kind of constructed a review of Chewy that is quite negative. And I hope that everybody takes those comments the right way, which is, it's just one more investor reviewing a company and seeing, is it a good investment for that investor? And I hope you don't take it the wrong way, which is, a negative comment on anybody's idea. And, sometimes I'm going to be wrong on a stock completely. But I just wanted to say that I appreciate you asking about Chewy. I think it's a good idea to take a look at it. And when I make comments on the fundamentals, it's just comments on the fundamentals. I'd like to keep doing that just to give you a honest opinion, how I see it. Okay. So, and whenever I make comments on a company that are basically negative, this applies, which is, I'm just talking about the numbers. And I'm sure Chewy is a nice website bringing people the products they're looking for.
I could say they treat their customers very well. I'm not a customer, but I've known several people and have heard stories that maybe somebody canceled an auto ship, and Chewy will assume at that point that somebody's lost a pet, and they will send flowers to the home. So there's not many companies around that have that kind of relationship with their customers. So I can speak very highly about the company, but just to support what Victor was just saying, the chart isn't supporting it and the fundamentals aren't supporting it, despite them being a great company as far as taking care of their customers.
Yeah,
So,
good to see your comment there, Benton. And I'll kind of go to a different company and kind of share a comment on Costco. So Costco, I don't like the stock. I've said that I thought it was too expensive. I've said that for about a year and a half. And I would say when I started saying that about Costco, I said it with knowing that, like Scott's due diligence, I've streamed with him. He's a big Costco investor. Uh, Charlie Munger loved Costco, and I'm a big fan of the late great Charlie Munger. I think he was a good example of a great investor. So I would talk and say, this is what I'm thinking about Costco. This is my, opinion on it. And that opinion ended up having some merit over time. And FYI, I'm a Costco customer. I like the Costco experience. I like buying products from Costco. It's around the holiday season. You'll find me at Costco. So I'm a very happy customer. But investing is different. Facebook. I'm a big investor in Meta. Great fundamentals. We went over Meta earlier. Now, I can't keep up, especially with the younger generation in my family on Facebook. They are like Facebook like ninjas, where I'm like not a ninja. I'm like, I try to keep up with them. For sure, I don't want to miss any birthdays. So I'm a Meta user, a very light user compared to others. I'm a light Instagram user. I'm a light WhatsApp user. I'm a big Meta investor because the fundamentals are so good. And when I talk about those fundamentals, I'll express it that way. I mean, look at those margins, look at that revenue growth. So as we look at stocks, that's how we can make money is if we separate like value, which is growth, profit, cash flow. Look at the balance sheet. Because if you were to remove the labels, which is the company name and what they do, you could find fundamentals that are really a great opportunity, especially if the market has a story in its head that business is broken because of this reason. Well, if that story becomes a fictional story at some point, you'll make a lot of money. So moving on, thank you. And everybody, please bring whatever stock you want to go over, but just remember the process we're going to follow. All right. We're going to move on to Uber. Uber is under pressure. What's going on? Is nobody taking Uber rides? Because it's down 5%. What gives, man? What is going on here? Here are Bill Ackman's 3 biggest bets and how he's positioning going into next year. Are you telling me he's going into Uber? I can't see it. So Morgan Stanley trims. So is Ackman in Uber? I don't know. I can look at that later. So these guys, let's take a look at like their fundamentals and where they're priced. And spoiler alert, I already bought shares of Uber today. Market cap 176 billion, forward P at 25, discounted according to analysts. Decent return for the 1 year, good return year to date. Depending when you bought, how you bought, you could be sitting on great gains with Uber. If you bought at the wrong time, you're not doing as great. If you bought here, if you bought here, if you buy here, but if you buy here, 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 you're like, I love Uber. I've made so much money on Uber. So let's see if now's a decent time to buy Uber. Okay, top line growth. Are we growing? Yes. And look at this growth acceleration. Okay, good. We were growing at 15% 2 years ago. Now we're growing at 20. That's excellent growth, acceleration. They're getting bigger and growing faster. Very good. So I wouldn't put it in the great category, but I would put it in the very good. Now we're going to look at free cash flow is in the great category. And this has a rational explanation, which is Uber can put 100,000 more drivers in the New York area. They can decide we're going to do that next year. And they won't have to buy one car. And they won't have to hire one person to actually be in the field providing those rides because they are in partnership with all these gig workers. It's a huge advantage. That means that they don't have to put capital to grow. Huge advantage. Look what the cloud businesses are doing these days. Hey, I want to be a cloud company. I want to have a large language model. Okay, Meta, I hear you. You're going to have to spend $50 to $75 billion a year. That's a lot of capital that they have to spend to be able to grow. Uber doesn't have to do that. They're like, hey, I want to put 100,000 more drivers in the New York area. Don't have to put any capital, but we have to do it right. So they put their best designs. So that looks great. Gross margins don't look great because they share those revenues with drivers. Profit margin does look great, 33%. Ring it up. Bingo. That does look great. Cash flow, I just talked about their advantages around cash flow. So Uber doesn't have a perfectly great profile, but a very good one. Balance sheet. Let's talk balance sheet. So they have $13 billion in debt, $9 billion in cash. So net $4 billion in debt. Debt to EBITDA 2.36, and it's taking the full debt number, which in my book is incorrect because I take net debt, which would probably bring their debt to EBITDA below 1. Balance sheet's in good shape. Balance sheet's in good shape. What is the market thinking? Why is the market selling off Uber? Fundamentals look good. Business has a very good future ahead of it. When you think about the growth, I just showed you the accelerating growth. When you think about food delivery, that's not going away. People have really liked food delivery. They're going to probably participate in the robo-taxi business. And they're probably going to expand the whole product delivery, or I should package delivery side of their business as well. All that in, I think the stock's highly discounted. This has been a consistently discounted stock based on my analysis for the last 3 years. So I've been consistently investing in Uber for the last 3 years. It is the 5th biggest position in my portfolio as a result. And today I bought more shares. Market wants to sell it off by 5%. I'll take it. I'll take it because I'm a dollar cost average guy. If I have a moment where market wants to discount Uber, I will take it. Over to you, sir.
Okay, so we're looking at 3 years worth of data here. We have this long-term support resistance line, which acted as resistance in March of 2024. We had a short-lived breakout above that line in October of 2024. It served as resistance in February of 2025. We had a breakout above that back in May, above that support line for quite some time. Then we have this blue line, which is about a 3-year trend line connected to the low we saw in December of 2022. It came down and tested that in 2024, December, broke down below that for just few days in April of this year. This is during the tariff announcements, and it is broken below it. Looks like about the 20th of November, but it didn't quite test this support resistance line. So to me, that's somewhat of a good sign. And now let's step in to just look at 1 year. So they've traded below their 200 days since the 20th of November. They did break out above it on the 3rd of December. Came and got back above this trend line, and then they're trading below the 200 day once more, but they haven't come down to test this. So we'd like to see it recover. It has lots of experience doing that. So they had a big drawdown here and then a recovery, big drawdown here and then a recovery. This was a drawdown here and a recovery. So it does this frequently. So I think Victor's right. It's at a good buy price today. If I go to my intraday chart that I showed you that I use for trading there, it does have quite a bit of momentum to the downside at the moment. So they're currently trading at 85.90. They did get up to 86.11 just a few minutes ago, but they're still have the momentum to the downside. This is 15-minute bars. So if I just look and see what the target could be if this continues, because these 5-period bars and 13-period bars are accelerating. I would not be surprised to see us back in the 82 range today, at least into the 83 possibly. Looks like the RSI is getting more strength to the downside. PPO is getting more strength to the downside, and the TTM squeeze indicator is getting more strength to the downside. So I'll probably pick up some shares today as well, but I'm going to wait for this to kind of bottom out here.
Thanks, Daryl. Looks like we have 3 stocks to go. So let me try to get through them quickly. Allstate. This is the stock that I'm investing in. I think it's the best price, best setup stock. And when I forgot who asked, but he said, hey, it's under pressure. He's right. And since then, the stock has picked up a little bit and gone from $200 a share to $201.68. Now, this stock for last year hasn't been a winner. You could have bought the stock at really nice times. And right now isn't bad. Over the 5-year, this has gotten the job done, because when you add that dividend, you're at 100% rate of appreciation and dividends. So this one here got the job done, and it had opportunities, especially here, to buy into a stock and just see it rise. The future looks good for Allstate, in my opinion. It has a decent balance sheet. When we look at their forecasts, it's forecasted that they're going to grow. So yeah, we're having a little bit of an adjusting year. This is mostly behind us. This is 25. We have 1 quarter to report, but next year and the years after are looking really good, where the PE ratio is going to be really low. And when we look at insurance stocks, right, it's all about the market of insurance stocks. We have Progressive in there, which has been a really good company overall. But Allstate stands up the tallest. And the reason for it is when we look at insurance, we want to look at a few things like PE ratio, return on equity. We want the lowest price to book possible. And when we look at all the factors, I believe that Allstate gives me the best opportunity. Progressive is excellent at return on equity, but its PE ratio is higher and its price to book is really expensive. So I can get a better ratio on price to book, a great return on equity, and a really low PE. And I believe the stock is discounted by 59% based on my analysis. So Allstate is a very good hold for me. I continue to add shares, and I could see myself adding more shares of Allstate. I'm kind of slowing my investment in kind of these kind of middle of the road stocks. I'm trying to concentrate into a couple stocks quite aggressively, but it's a buy for me, and its fundamentals look really good. I think it stacks up really well in the insurance space. What do you think of Allstate, Daryl?
Yeah, so I have a support line that goes back to the 12th of December. Been tested several times. We had a breakdown below that. I've noticed that in the last 3 trading days, they tried to push the price down to the 200-day, but it recovered. So if you look at that candle right there, the bottom wick came down intraday and got below the 200, but closed higher. The next day, we had prices being pushed up and rejected and came down to close just about where the close was the day before. And then today we had sellers trying to push it down to, or buyers, sellers were pushing it down to the 200-day. And now we're trading above that at about 280, 202. So we have a downward sloping 5-day moving average. It's been trading below that for 3 days. We have a downward sloping 21-day. The 200-day is upward sloping. The RSI got down to 40, but is moving higher. We did have a bearish crossover in bullish territory, and it has moved into bearish territory. The 12 and 26-day moving average has moved into bearish territory. No, it hasn't. It's still just above it. So still in bullish territory. We do have some distribution since the 14th of November. So people started selling it about right here, and the distribution has continued. I think anywhere around the 200 days, probably a good price, but I would not be surprised to see the support line come back into play.
All right. Thank you, Daryl. So Allstate. Now moving on to DSP. DSP is Viant Technology. They're in the ad tech space, competing against AppLovin and the Trade Desk. And they are a neat little business, less than $1 billion in market cap. Now, the last quarter was a little bit of a problem because they showed that the growth in top line is decelerating. Not good. They're a small player. But other than that, if they can start growing, that might recover. But AppLovin is growing so darn fast. I think that's going to be always a headwind. They do free cash flow. Gross margins are not as high as AppLovin, and very little profit. This stock is discounted, in my opinion. It's got a discount of 37% when you look at the value of its cash flows. But what you have is a market of stocks. The market of stocks within ad tech, just looking at 3, which is Viant, AppLovin, and Trade Desk. AppLovin has been the star of the show. It's up 117% year to date. And I decided to really concentrate my investing into AppLovin. And it's been a winner in my portfolio. Now I'm going to keep betting on this horse because it keeps winning races. It really has phenomenal fundamentals. Back to that term I used, look for what great looks like. And AppLovin matches that template quite well. High free cash flow, high profits, high cash flow, dominant in its space. So AppLovin is a horse that I'm going to ride. Viant, I think, is a neat little idea. I think it could work. And I would extend those comments over to Lyft. I see Michael Anthony's asking about Lyft. Lyft is a little bit like Viant. It's playing in the market with Uber being the dominant player. Will it ever be a very relevant company? I don't think so. I think Lyft already lost that war maybe 5-10 years ago. And it'll always be a mobility play, but it will never be anywhere near the size of Uber. Uber is taking a lot of that share, taking the mind share of the consumers. So that's where I'm at with Viant. It's going to be an interesting little stock, but I decided to get out of it at a small position, just concentrate over to App Lovin'. So let me kick it over to you. What are you thinking on DSP?
Well, they're gonna be fighting this 200-day. It's been down sloping. They've just about reached that point. They're looks like they're about 20 cents away from hitting that 200-day moving average. I can kind of confirm that with this overbought condition. So not only is it battling against the 200-day, but it is also moving into overbought territory. PPO does look good. So if I was if I was in this one or was not in this one and I wanted to get into this one, I would let it battle out this 200-day moving average. I would expect it's going to pull back to the 21-day, and that's where I would pick it up. Purchasing it here is you're going to be running right into people selling at that 200-day moving average and buyers not wanting to push it higher.
Thank you, sir. So we got 2 to go, one full and then one quick chart review on NVO. So Merck, and we were asked about Merck, and looking at Merck here, and the first thing I wanted to jump to was what's their revenue forecast look like? Because the comment said that they have a new drug that's launching that should stir up some growth, and it looks like the growth is expected in 26, 27, 28. This is a big company, so that growth is meaningful. It's a low PE stock, and I've valued Merck in the past, and it was pretty much discounted. And if they're going to grow at this level, that would be a good idea. A lot of analysts are covering the stock, so that looks good. And they think it is discounted. So looking at their free cash flow, so $13 billion of cash. This is just a cash cow. This business is worth probably 250 billion minus debt. Let's see how much debt they have. Net debt 23 billion. So let's call it 230. They're worth 230 billion, but they're being market cap's 241. So right now, Merck's still too expensive. Even though they're going to have decent growth, it's just expensive. I think that the stock that's got my eye right now is Regeneron. I think their growth is going to be better than Merck and has a better valuation. So that's where my capital is going. Regeneron and a couple of others. But that is Merck. Thanks for pointing that out. It's interesting to see that they're going to be growing. What are the charts looking like on Merck? And then when you're done with Merck, if you can take a look at NVO charts, that'd be awesome.
Okay. So one of the things I notice is Merck tests the 50-day moving average a lot. And any time that it gets, here is a 10% above the 50 line, you have a pullback to the 50 line. Here they got 5% above it and pulled down below it. Here they basically got 25% above that. So I think the next stop is going to be the 50-day moving average, which could come to meet it right around $93 is where I would suspect that it would touch that, and that would be a pretty good entry point. They were overbought. The RSI did come down to the 50 line, and it looks like that could be support. It is trying to move a little bit higher today. We did have a bearish crossover in bullish territory We do have a little bit of distribution on this one, and money flow is negative. So I'd be keeping an eye on that 50-day moving average because it tests it a lot. Okay, and then NVO.
Yep, please.
Okay, we've looked at this one quite a few times as well. So we have a 1-year downtrend line that's connected to the high we saw in December. It came and touched it again in June of this year, has been trading completely below that trend line since. Then we have another one connected to this high. It tested it here, broke above it again after a breakdown. It's broken down below it. And I think if I go out to just 1 year and extend this bottom trend line, they are battling that trend line. So in my personal opinion, they've got to break above this line for probably a week, because every time it's broke above it in the past, it can't do it for more than about a week. So it would need to break above this for at least a week before I could get terribly interested in this one. The 200-day is still down sloping. The 50-day is down sloping. The 5-day is trying to move higher today. The 20-day is sitting right around in today's trading range. So I don't have that one set to an EMA. I'll do that afterwards. They are neutral RSI. They're sitting right at 50. They do have a positive sloping PPO, but it's in negative territory. The money flow is positive. We did see some buyers step in, but it stalled out. So this trend line's still in play.
Perfect. Thank you, sir. So one extra question came in from Magical Self. So Magical Self, short answer, I think Regeneron's discounted by 37%. And it was part of this biotechnology stocks best and worst. And I kind of, really reviewed Regeneron as I think the second stock in the video. Take a look at the stock. You have to be an advanced investor member to see this video. I released it 2 days ago, so it's pretty fresh. And then you can look at the analysis on Regeneron as well as all these other companies in this space. And I picked out, there's 2 stocks that are really, really looking good in this video. Take a look, and I hope you find the analysis interesting. All right, so let's wrap this show up.
The entry point on NVO, I didn't answer that specifically. It looks like it would be between about 43 and this down sloping line would be about 45. So somewhere between 43 and 45, I expect it to land there. That would be a good entry spot.
Excellent work. All right. So what's happening with your channel? What do you want viewers to keep in mind, maybe watch or visit on your channel?
I did put out a video on Costco yesterday. So if you're interested in Costco and my interpretation of the charts going into the earnings, you're more than welcome to take a look at that video. I compare it to Walmart as far as the stretch above their intrinsic value. So anyway, you can take a look at that video.
Excellent. Thank you. And just to tell you about what's going on with my channel, I've put more time this week into creating member content, and really the way that I'm going to produce content is I'm principally going to produce content for advanced members, super, and platinum. And I think value investors, when you come on streams, you can give us stocks. We look at them. There is some value investor content that I put out there, but that's principally the benefit that value investors get. Once we get into this level, I'm producing a lot of content like that biotech best and worst, and I'm creating a new video today that I'm going to release, and I'm going to really aim. I reviewed yesterday. I reviewed AutoZone, which is a stock that I reviewed a month prior and stated that that stock was too expensive. And boom, it announced yesterday. Excuse me, it announced, yesterday before the market opened, and that stock was under pressure of 5 or 6%. So that's the kind of content that I'm producing for advanced members. And if you're a super investor or platinum investor member, you get all these benefits, everything on the page. If you're a platinum member, super investors get one-on-one calls. I produce videos where I produced one yesterday. I'm sharing the trades that I'm doing this week, my portfolio, my highest conviction stocks. I reserve that for investors that would like that level of access. So think about it. It's great to have all of you on the streams. It's great to have many of you as members. I really appreciate it. And I'm really putting more time and energy in creating content. I hope you find it interesting. And in general, I hope it helps you become a better investor. So that is it for our stream on this session. Thanks everyone for joining us. We will be back on Friday. And on Friday, we can go over Broadcom, Costco, wrap up the week. By that time, we know that it's by that time we will know what the interest rate impact is going to be, and we'll see what kind of plan we should have for next week and the remainder of December and our setup into 2026. So thanks for joining us today, everybody. Have a terrific day and good luck with your investments.
Take care, everyone.